Something just broke in the global monetary system. And it didn't break quietly. While you were focused on market headlines, helicopters touched down in Caracas. 30 minutes later, $17.3 trillion of oil reserves changed hands. But that's not the story. The story is what this operation reveals about the desperation driving it. A pattern so predictable, so mathematically certain, that once you see it, you realize we're not watching the beginning of something. We're watching the endgame. This isn't about Venezuela. This is about a system that's been bleeding for decades, finally running out of band-aids. The surface event looks straightforward. Military operation, regime change, democracy restored, oil secured. Standard geopolitical maneuvering that's happened dozens of times before. But this is where things stop making sense. Why now? Why Venezuela? Why risk international condemnation for oil reserves that produce less than 1% of global supply? Why conduct a military operation to secure resources that would take 15 years and $180 billion to fully extract? The answer isn't in the oil. The answer is in what the oil represents. Hard assets, physical value, something real backing up a system built on promises that are becoming harder to keep. This wasn't a choice. This was a necessity. And when empires start grabbing physical assets through military force, you're not watching strength. You're watching panic disguised as policy. Here's what they don't teach in economics classes. Every empire that's ever existed has followed the same 7-stage death spiral. Same sequence, same outcome. No exceptions. The United States just entered stage 4, and once you understand how this pattern works, you'll see it everywhere. In the timing of military operations. In the justifications for asset seizures. In the rhetoric about national security that always accompanies empire desperation. Stage 1 was the foundation. Bretton Woods. Dollar backed by gold at $35 per ounce. Real money attracting real commerce. That foundation was legitimate. It built the greatest economic expansion in human history. America held 2/3 of the world's gold reserves. Other currencies were pegged to the dollar. The system was sound. It created genuine wealth. It funded real productivity. This is how empires begin, with legitimate value creation. But here's what most people miss about empire foundations. They're not built to last forever. They're built to create the initial wealth that funds the expansion phase. The foundation serves its purpose, then gets abandoned when the costs of maintaining it exceed the benefits. Stage 2 was expansion, social programs, military reach, infrastructure projects, all funded by genuine productivity and trade surpluses. The middle class exploded. Quality of life improved across all income levels. This was real prosperity. But here's the critical transition point that historians miss. The expansion wasn't just economic, it was psychological. Americans began to believe the prosperity was permanent, that the system was invincible, that the rules of fiscal discipline didn't apply. This is the empire mindset, the belief that wealth can be consumed indefinitely without being produced, that credit can expand forever without consequences, that military reach can substitute for economic fundamentals. Every empire develops this delusion. The Romans believed their engineering made them eternal. The Dutch believed their financial innovation made them indispensable. The British believed their industrial advantage made them unbeatable. They were all wrong. Stage 3 was the breaking point. Vietnam, Cold War, military overextension costing hundreds of billions annually, defense spending exploding as America tried to project power across 6 continents simultaneously, and then the moment that sealed everything. August 15th, 1971, Nixon closing the gold window. The dollar became pure fiat, backed by nothing but faith in the system. That was the debasement moment, the same monetary destruction that killed Rome's denarius, that shattered the Dutch guilder, that ended the British pound's dominance. The pattern was locked in. But here's what makes stage 3 so insidious. The effects aren't immediate. Currency debasement creates a lag effect. The inflation takes years to manifest fully. The loss of purchasing power happens gradually. By the time people realize what's happening, it's too late to reverse course. The 1970s proved this. Double-digit inflation, oil crises, stagflation, the purchasing power of the dollar cut in half within a decade. But the system didn't collapse because of one critical innovation, the petrodollar arrangement. Oil priced in dollars globally. Countries needed dollars to buy energy. This created artificial demand that extended dollar dominance for another 50 years. But extensions aren't solutions. They're delays, and every delay makes the eventual reckoning more severe. Stage 4 is desperate resource acquisition. When empires realize their currency is losing credibility, they go after hard assets, physical value, anything with intrinsic worth that can't be printed or promised into existence. Look at the sequence. Iraq, 2003. Oil reserves. Libya, 2011. Oil and gold reserves. Syria, ongoing. Strategic positioning and resource access. Now Venezuela, 303 billion barrels of oil worth $17.3 trillion at current prices. This isn't coincidence. This is empire economics, the pattern asserting itself through military action. But here's what makes the Venezuela operation different from previous resource grabs. It's happening while the domestic fiscal situation is deteriorating rapidly. Previous operations occurred during periods of relative stability. This one is happening during crisis. That suggests desperation. That suggests time is running out. That suggests the system is breaking faster than anyone wants to admit. But this wasn't supposed to happen yet. The safeguards were still in place. The petrodollar system was supposed to provide another decade of stability. Foreign governments were supposed to keep holding dollar reserves. They didn't expect this move. The numbers reveal what triggered the desperation. $38.5 trillion in national debt, growing by $62 billion every single day. That's $2.5 billion per hour, $42 million per minute, 700,000 per second. But that's just the federal debt. Add corporate debt, household debt, state and local government debt, financial sector debt. Total system debt exceeds $100 trillion. That's 4 times the size of the entire economy. Interest payments that just crossed $1 trillion annually for the first time in history. A debt service that's tripling while the economy struggles to maintain 2% growth. This creates what economists call the debt trap, the point where interest payments grow faster than economic output, where more borrowing is required just to service existing debt, where the system becomes mathematically unstable. We're not approaching the debt trap. We're in it. Congressional Budget Office projections show the debt reaching 156% of GDP by 2055. Under current law, if tax cuts are made permanent, if spending programs expand, the ratio could hit 220%. But those projections assume no recessions, no financial crises, no major wars, no pandemic responses, no climate disasters, no social unrest requiring emergency spending. In other words, they assume nothing goes wrong for 30 years. History suggests that's not realistic. This is fiscal dominance. The debt is so large it controls monetary policy. Raise rates to fight inflation, the debt becomes unpayable. Keep rates low, the currency loses purchasing power. Janet Yellen admitted this on January 5th. She warned that the preconditions for fiscal dominance are clearly strengthening. That if investors lose faith in America's ability to return to fiscal discipline, they'll demand higher interest rates. Higher rates on $38.5 trillion of debt. The math is catastrophic. $17 trillion, $300 billion. That's the theoretical value of Venezuela's oil reserves. Compare that to the $38 trillion in debt. The math suggests this operation could reduce the debt burden by almost 50%. But it won't, because extraction takes decades. Infrastructure investment requires hundreds of billions. Political stability needs to be maintained. And most critically, the debt keeps growing faster than any resource acquisition can offset it. Even if Venezuela produced 5 million barrels daily, that's $100 billion in annual revenue, against debt growing by $22 trillion annually. The debt grows exponentially. Resource extraction grows linearly. Exponential functions always overwhelm linear functions. And here's the mathematical certainty that makes this pattern inevitable. The Venezuela operation might delay the crisis by months or years. It cannot prevent it, because the fundamental problem hasn't been addressed. Spending exceeds productive capacity by margins that make the debt mathematically impossible to service. Every economist who understands debt dynamics knows this. Every central banker who looks at the projections knows this. Every foreign government analyzing dollar sustainability knows this. The Venezuela operation is admission that conventional solutions have failed, that fiscal responsibility is politically impossible, that the only remaining option is resource extraction through force. This doesn't happen by accident. Someone knew. This move was prepared. But while the media focused on domestic politics, while investors chased stock market gains, the intelligence apparatus was watching different numbers. Debt service projections, foreign reserve flows, confidence indicators. The preparations for this operation began months ago. Satellite reconnaissance over Venezuelan oil infrastructure, intelligence assessments of regime stability, diplomatic coordination with regional allies, military logistics planning for rapid deployment. But the real preparation was financial, the quiet movement of capital by those who understood what was coming. 142,000 millionaires relocated internationally last year, the largest voluntary wealth migration in recorded history. This year's projections? 165,000. They're not leaving because of taxes. They're leaving because they understand the pattern. They've read the debt projections. They've analyzed the fiscal mathematics. They know what stage 4 behavior looks like. The exodus isn't random. They're moving to jurisdictions with no income tax, political stability, and asset-friendly policies. UAE, Singapore, Switzerland, countries that aren't drowning in unpayable debt, countries that aren't conducting military operations to pay their bills. This is capital sensing danger and seeking safety. When capital flees this aggressively, it's because something fundamental has shifted, something that can't be fixed with policy adjustments or economic stimulus. But the millionaire migration is just the visible part. The invisible part is more revealing. Foreign central bank reserve diversification accelerated dramatically in the past 18 months. Not just China and Russia, traditional allies. Japan reduced treasury holdings by $80 billion in the past year. Germany increased gold reserves by 15%. Even the Swiss National Bank diversified into other currencies. They didn't announce these moves, they didn't coordinate publicly, but the pattern is clear. America's closest financial partners are quietly reducing their exposure to dollar collapse. The dollar's share of global reserves has fallen from 71% to 59%. Foreign central banks are selling treasuries for the first time since World War II. Countries are diversifying away from dollar dependence aggressively. China reduced treasury holdings significantly over the past decade. Saudi Arabia is pricing oil sales in yuan. Russia and Iran eliminated dollars from bilateral trade entirely. This is capital flight at the sovereign level. And when reserve currencies lose confidence, they don't decline gradually. They collapse suddenly. The Venezuela operation was the signal that someone at the highest levels recognized the endgame was approaching. The decision was made to secure physical assets while the military option was still available. But the operation also reveals something darker about the preparation phase. The intelligence community had to know that seizing Venezuelan oil would accelerate the very trends they were trying to combat. Every foreign government analyzing this operation reaches the same conclusion. If America will take Venezuela's resources by force, no country's assets are safe from similar seizure. This creates the resource hoarding response that fragments global supply chains. It triggers the defensive alliances that isolate American economic influence. It accelerates the development of alternative payment systems that bypass dollar dependence. The Venezuela operation solves a short-term liquidity problem by creating a long-term strategic nightmare. This suggests the planners knew the timeline was shorter than anyone wanted to admit. When you're willing to trade long-term strategic position for short-term resource access, you're not planning for decades of stability. You're planning for months of survival. But here's what they didn't calculate. The operation creates the very resistance that makes the resources inaccessible. Every resource-rich nation is watching. They're asking, if America will seize Venezuelan oil, what about our resources? This creates resource hoarding mentality. Countries restricting exports, building strategic reserves, forming defensive alliances. Each restriction creates scarcity. Each scarcity increases prices. Each price increase makes additional restrictions more attractive. The feedback loop accelerates until global supply chains fragment. The more aggressively an empire pursues resources, the more resistance it creates. Rome expanded until they couldn't defend their borders. The British Empire grew until colonial costs exceeded benefits. The Venezuela operation secures $17 trillion in theoretical value. But it guarantees other resource-rich nations will align against American interests. And domestically, the social structure fractures under the same pressures that destroyed previous empires. Inflation eroding purchasing power, wealth gaps widening, political extremism rising as institutions lose credibility. The public is war-weary after decades of overseas interventions. Approval for new military commitments polls below 30%. Opposition parties can attack priorities. Why secure foreign oil while domestic energy costs remain high? This reflects empire fatigue that brought down previous powers. Citizens tire of subsidizing global reach while their living standards decline. The social contract dissolves. People withdraw consent. This is how empires die. Not through external conquest, but through internal dissolution. But there's a deeper layer to this operation that reveals the true desperation driving it. Technology was supposed to save the system. Artificial intelligence, renewable energy, productivity growth that would service the debt. Despite having the most advanced military technology in history, the United States still needed physical force to secure physical resources. All the satellites, cyber capabilities, and advanced weapons couldn't solve a fundamental fiscal problem. Technology can't overcome mathematical constraints. It can't print oil from software code. It can't generate fiscal discipline through algorithms. Rome had revolutionary technology, concrete that lasted millennia, engineering that created structures still standing today. None of it prevented collapse when the fiscal mathematics became impossible. The Dutch created modern banking, stock markets, insurance systems. It didn't save them when British naval power broke their trade monopoly. Britain presided over the Industrial Revolution, the greatest technological leap in history. It didn't prevent the pound's collapse when world wars drained their treasury. The pattern doesn't care about American exceptionalism. It's mathematical, mechanical, inevitable. Here's where it gets more serious. The Venezuela operation suggests we're entering the acceleration phase. Stage 5 is loss of confidence. Foreign governments diversifying reserves. Social tensions rising as inflation erodes purchasing power. Stage 6 is fiscal dominance, interest payments consuming government revenue. The central bank trapped between fighting inflation and servicing debt. Stage 7 is collapse and reset. Currency becomes worthless. Generational wealth transferred from paper holders to hard asset owners. Historical precedent gives us the timeline. Once fiscal dominance sets in, collapse typically takes 5 to 25 years. sometimes less if confidence breaks suddenly. But the Venezuela operation creates feedback loops that accelerate everything. The military action required congressional approval. Congress understood the debt mathematics. They approved the operation not because they believe it will solve the problem, but because they're out of other options. One desperate measure forces the next. The operation creates international tensions. Tensions require military spending. Military spending increases the deficit. Higher deficits require more borrowing. The feedback loop accelerates. And here's where time starts running out. Every empire collapse in history rewarded the same asset classes: physical commodities, productive land, strategic resources, anything with intrinsic value that doesn't depend on government promises. The Venezuela operation is essentially a massive bet on physical oil reserves over paper dollar promises. The United States government is telling you which assets they think will hold value when the system resets. They're not grabbing treasury bonds. They're not securing digital assets. They're taking physical oil that's been in the ground for millions of years. This is the wealth transfer signal. The empire itself is moving from paper assets to physical assets. Following the same pattern that preserved wealth during Roman collapse, Dutch decline, and British devaluation, most people won't see it until it's too late. They'll trust the system, believe in exceptionalism, and assume things will work out. History says they won't. The Venezuela operation represents the point where maintaining the current system requires increasingly extreme measures. When empires start conducting military operations to pay their bills, they've crossed a line. This is the point of no return, not because the empire will collapse tomorrow, but because the measures required to prevent collapse become more extreme than the collapse itself. The pattern is locked in, the sequence is activated. What comes next is already written in the ruins of every empire that thought it was different. Rome controlled the Mediterranean for 5 centuries, 50,000 miles of roads, aqueducts still functioning. The denarius was the global reserve currency, but empire maintenance was expensive. They started debasing the currency. In 64 AD, the denarius contained 94% silver. By 265 AD, 0.5% silver. Prices exploded 1,000% across the empire. Those holding land and gold survived. Those holding denarius were destroyed. The Dutch followed the same pattern. The guilder was the world's first modern reserve currency, but by the 1700s, they were overextended. When Britain challenged them, the system collapsed. Britain lasted longer. 200 years of pound dominance. But 2 world wars drained resources. By 1944, the dollar replaced the pound. 3 empires, different centuries, same patterns, same outcome. And now the mathematics are accelerating beyond anything previous empires faced. The debt service ratio is approaching levels that have never been sustained in peacetime. The resource grab through military force indicates desperation that historical precedent says leads to rapid deterioration. The Venezuela operation might delay the crisis by months or years. It cannot prevent it, because the fundamental problem hasn't been addressed. Spending exceeds productive capacity by margins that make the debt mathematically impossible to service. But here's what makes this different from previous empire collapses. The interconnectedness of the modern financial system means when the dollar loses reserve status, it doesn't just affect America. It affects every economy, every currency, every asset class globally. The wealth transfer won't be contained to one country. It will be planetary. Those who understand the pattern will position accordingly. Those who don't will watch their savings evaporate. The only question is timing, and the Venezuela operation suggests time is running shorter than most people realize. When you're desperate enough to seize oil reserves worth $17 trillion, you're not planning for decades of stability. You're buying months, maybe years. The helicopters that touched down in Caracas weren't just conducting a military operation. They were documenting the moment the system started breaking in ways that can't be fixed. If this continues, the price of oil won't be the real problem. The problem will be what you're paying for it with. By the time the headlines admit what the helicopters already revealed, it will already be too late.